Hello and welcome to this session in which we would look at US Auditing Standard as a basis for further study. But specifically, we're going to be looking at something that we called the Clarity Project. Okay, but before we talked about the Clarity Project, it's good to get a little bit of a background about who's responsible for what in the US as well as internationally. As we learned from a prior session that the AICPA, they issue auditing standard for private companies in the US, and they issue the SASs, Statements of Auditing Standards. Then we have PCAOB. They issue auditing standard for public companies or issuers, and they issue auditing standards, AS. Then internationally, we have the International Auditing and Attestation Standard Board, and this is international. And they issue what we call the International Statements on Auditing, ASI. Okay, so those are the three groups. But here's what's happening. As we talked also in the prior session, that there's a lot of conversions between US standards and the international standards. So what did the AICPA do? The AICPA embarked on this something called Clarity Project. To do what? To align US with international standards. So what happened is this: if you want to align, you have to basically start by basically redrafting your standards, redrafting existing auditing standards. So to align them, to make them easier to read, understand, apply. So that's the purpose of the Clarity Standard. Okay, and this is what we're going to be discussing. Basically, that new draft that's going to make US standards very similar to international standards. And bear in mind, I said this before in the prior session, that the PCAOB standards are very similar to the AICPA standards, because before the PCAOB, AICPA were the only auditing, they were only the only party that's issuing auditing for both public and private. So that's why they are similar. Okay, so the ASB, and what's the ASB? The ASB, the board for the AICPA, issued a preface to the codification of the audit standards containing the principles underlying an audit in accordance with generally accepted accounting principles. A lot of terms here, but here's what we need to know. The AICPA board, the Auditing Standard Board of the AICPA, this board here, they issued those principles. Okay, they call them the principle underlying an audit and according with the AICPA. So now they issued principles. Okay, so we're going to be discussing those principles, and the purpose for those principles is to do what? Is to align US standard with international standards. So this is what the basically, to a great degree, the Clarity Project is. So what does the principle state? So every time we refer to the principles, it means the principles that's helping to align US with international. Provide a framework for two objectives of conducting an audit of financial statements. They're saying based on the principles, there are two objectives when conducting an audit. And what are those two objectives? Straightforward: obtain a reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud and error. So that's one objective. Collect reasonable evidence. And two, issue a report on the financial statements and communicate as required by GAAS, a generally accepted accounting principle, in accordance with the auditor's findings. So you need to do two things. So the principle said you need to do things: obtain reasonable assurance and issue a report. Fair enough. Now, also, bear in mind, the principles are not requirement and do not carry authority, but they provide structure for the codification. What is structure for the codification? If you remember from intermediate accounting, you learn about the conceptual framework. It's very similar. It's the theory behind the rules. It's not the rules itself. It's the theory behind the rules. So the structure is organized around the following principle. So that's how the structure organized. The first thing they do is they say there's a purpose for an audit. And we're going to look at each one of those bulleted points in details. Then we have to look at the personal responsibilities of the auditors. What is the auditor is responsible for? Auditor's action in performing the audit. How is the auditor performing the audit? So what is their responsibilities and how are they performing the audit? So we have a purpose, responsibilities, performance, and at the end you have to issue reporting. So those are the four areas that the principles structure the auditing theory on. Now we're going to look at each one of them separately. So first we're going to look at the purpose. So the first thing we're saying, there's a purpose for an audit. And what is the purpose for an audit? What's the purpose of an audit? The purpose for an audit is to provide an opinion about the financial statements. You are providing an opinion. What is this opinion? Well, but the opinions basically is going to state your statements are fairly presented according to some standard. And what's the purpose? Why do we say this? Why do we issue an opinion? Well, to enhance confidence by the users, to enhance confidence. So that's the purpose of an audit, to enhance confidence in the financial statements. Enhance the confidence. Now we also have to, and the purpose of the purpose of an audit, we have to mention few things. One of them is management responsible for financial statements. So the management is responsible for the financial statement. Also, management responsible for what we're going to discuss later, something called internal control. It's how the company is being run. It's the responsibility of the management. It's not only the internal control, it's the design of the control, the design of the policies and procedures, the implementation, how you implement the internal control, and how you maintain the internal control. So management is responsible for all of those. Also, in the purpose of the audit, basically what's being mentioned is also the company, the client, gives access to information and persons. So as an auditor, the assumption is when you're auditing a client, you have access to all the information necessary to issue an opinion about the financial statements, and you have access to all persons in the company if you need to ask them any questions about the audit. So this is basically the main points of the purpose of an audit. Okay? Now, let's talk about the responsibilities. What are the responsibilities? So who's responsible for what? Okay, the auditor. What is the auditor's responsibilities in an audit? Well, the auditor must do what? Must possess competence, appropriate competence, and capabilities. What does that mean? What does it mean that the auditor must possess competence and capabilities? What do you think? Well, they have to have, if you really think about it, formal education. Formal education, of course. Experience will work. You have to have some sort of a practical experience. That's really helpful. You have to keep up your continuous professional education. You have to keep training your employees, CPEs. And guess what? If a firm does not have those qualifications, they should decline a client. Obviously, if you don't have enough education, enough experience in that industry, and you don't constantly train your employees, just leave. Not leave, just decline the engagement. Okay. Also, the part of the responsibilities is to comply with ethical requirements. And part of the ethical requirements is to be independent. So you have to be, because you are providing an opinion, you have to be independent of the client. And what does independence mean? We're going to look at independence shortly in future sessions. So this topic we're going to cover heavily. What does independent mean? Also, your responsibility is to do what? Is to maintain a professional skepticism and exercise professional judgment. Now, how do you exercise professional skepticism and judgment? Well, when you start the audit, you plan and perform the audit appropriately. So you don't just jump into it. You want to run some analytics. You want to look at the company overall. You have to have questioning mind. So part of professional skepticism is questioning mind, basically questioning what the client is presented to you. Look at it from a different perspective. Be alert. Be alert to red flags. Be alert to red flags that might indicate fraud or errors. So be alert for those red flags. Sorry, I just the screen keep on skipping because the pen is not the best pen. And also, when you look at the evidence, you evaluate the evidence appropriately. Be diligent, for example, when you're doing an audit. Be careful. Those are all characteristics of having professional judgment and professional skepticism. So this is what they mean by this. Okay. Now, when you perform the audit, how should you perform the audit? Now, performance, we're looking at the performance issue. When you perform the audit, it says you have to obtain reasonable assurance. That's the first thing we need to define. Reasonable assurance means not absolute assurance. You are not auditing every single transaction in the company. You're going to be sampling, you're going to be selecting transaction. Therefore, you only can provide reasonable assurance versus absolute. No absolute assurance. You can do that. No absolute assurance. Okay? Whether the financial statements are free of material misstatement. And what is materiality? Basically, what materiality is, if the knowledge of a misstatement affect the decision of a reasonable person, then it's material. So something is material when it affect reasonable person decision. If it doesn't affect a reasonable person decision, then it's not material. So for example, a $10 error may not be material if it's there. Then we say it's not material. So within $10, it's not material. If it is material, if it affects someone's reasonable person decision, then it is material. So you have to provide reasonable assurance, taking materiality into account. Now again, don't worry, we're going to talk about materiality much more. How do we determine materiality? Also, we have to plan work and supervise assistant. What does that mean? If you have less experienced staff, which you will, and you will be one of those less experienced staff as a college student, you have to supervise them. Okay. Also, determine and apply materiality level. Again, we'll talk about materiality later on, how to determine materiality and how to apply it. Identify and assess risk of material misstatement based on the underlying concept and the environment, including internal control. So here they're talking about internal control. Now, we're not going to talk about internal control in depth today, but basically what we're saying is you need to assess the risk of a company. And how do you able to assess the risk of the company? You have to have a good understanding of the business. So if you have a good understanding of the business, so you have a good understanding of the business, then you can better assess the risk of the company. Let's assume you are auditing an e-commerce company. Company that have a website, and that's what they do. Take Amazon, for example. This is way too big, but let's assume you're auditing a company like Amazon e-commerce. What do you have to know? Well, you have to know a lot of things. For example, how secure is the website? How reliable is their network? Do they have a backup plans in case their system went down? Because those are risk to the financial statements. They're going to affect the business. That's a business risk. It's very important to understand the business risk, understand their competitors, and we'll talk about the business risk later on. For example, if you're auditing a bank, what should you be familiar with? You should know the federal regulations, the state regulations in which the bank operate. And just for now, if you have good internal control, if the company has good internal controls means good policies and procedures that's helping protecting the asset, properly reporting financial statements. If you could rely on the company's internal control, the more you can rely on the company's internal control, the less work, less work, the more you can rely on the internal control, yes, the less substantive work you will do, the less evidence you will collect, the less substantive work you will do. But we'll talk about this concept later on. But if you cannot rely on the internal control, you might have to do more work. And obviously, one of your performance, if you have to obtain sufficient appropriate evidence. And basically, going forward, we're going to spend a lot of time looking at evidence, how to collect evidence, how to evaluate evidence, what is a good evidence, what is a bad evidence. But this is the performance section of the Clarity project. Basically, this is how you perform an audit. Okay, and obviously at the end, what do you have to do at the end once the audit is done? You have to prepare a report, and in that report you'll express an opinion on the financial statement in a written report, and you will state whether the financial statements were presented fairly in accordance with the financial reporting framework or the applicable financial reporting framework. So this concept is important, the financial reporting framework. So the financial reporting framework could be GAAP, could be IFRS, could be tax, could be cash, whatever framework you are using for this audit. Okay, so those are what we call the principles. Are they mandatory? No, those are general principles. Those are general principles. Okay, so here we go, a review. The purpose of an audit is to provide financial statements with an opinion and as to whether the financial statements are presented fairly. Responsibilities, the auditor responsibilities stress the importance of the qualities of the auditors that they should possess. They should possess competency and capabilities, and we talked about those. They should comply with relevant and ethical requirements, such as the most important one is independence. Maintain professional skepticism and exercise professional judgment. Again, have a questioning mind, so on and so forth. We talked about this. Performance, how should they perform the audit to obtain reasonable assurance that the financial statements present fairly? They have to have adequate planning and supervision, determine and apply materiality level, assess the risk of material misstatement, obtain sufficient evidence. And each one of these topics, we're going to have a whole chapter to discuss. So don't worry, this is just an overall picture. Report, the auditor is responsible for expressing an opinion in the form of a written report, that's an attestation. Report about whether the financial statements express fairly in all material respect in accordance with the applicable financial reporting framework, AFRF, the applicable financial reporting framework. Okay, because they don't want to be limited to GAAP, they want to have this criteria, which is the applicable financial reporting framework, open to any criteria. And the audit report is the final step in the auditing process. Although the audit report is the final step in the auditing process, you're going to see how this course is going to go. The first thing we're going to look at is the audit report. Then from the audit report, we'll work backward in planning, supervising the audit, determining materiality, collecting evidence, and evaluating the evidence. So we're going to really work backward in this, not work backward, you will see why it's more helpful to do so. So remember, those principles, we have to differentiate between the principles and the auditing standard. Who issued the auditing standard? Let's go back to when I started. The AICPA issued the SASs, those are auditing standards. PCAOB issued the auditing standard. And this is the principle. The principle, again, think of it as like the framework, what you studied in intermediate accounting. Hopefully you remember your conceptual framework. And to a great degree, it's like the conceptual framework. So, principles versus auditing standard. The principles underlying auditing standards are general in nature. The standards, which is the SASs and the auditing standards, provide specific guidance. So when you are doing an audit, you don't look at the principles, you look at the SASs and the auditing standards for specific guidance. Okay? SASs are issued by AICPA. They have two classification number, an SAS number identifying the order in which it was issued, and AUC number indicating its location in the codification of the auditing standard. And this AUC, basically the SAS and the AUC are the same, but the reason they have this AUC is to start to comply more, to be more like the international standard on auditing. Okay, auditing standard issued by the PCAOB are also numbered consecutively as issued, like AS1, AS2, so on and so forth. Okay, so recently the PCAOB recently reorganized their standard by topic. So now it's more by topic. Standard of performance. All the auditing standard provide authoritative guidance for members of the profession. The amount of guidance is limited. So the standard do help, but they're not gonna answer every single situation. The AICPA principles that we discussed here and the auditing standard are the minimum standard of performance. If standards seem impractical in a certain situation, the auditor may use alternative course of action. So if you don't find an answer or there's not enough guidance, you could use an alternative action, but you have to justify why you are using this method of collecting evidence, for example. When the auditor wants more specific guidance, they must use less authoritative sources, such as material published by the AICPA, including industry audit guides. Industry audit guides provide assistance on specific questions. So this is what happens if you want to go into specific areas. Then you have to look at industry audit guides. And usually, as I showed you in the prior session, the AICPA, they do a lot of research and they publish those research on their website to help auditors conduct an audit, because there is no specific answer. The next topic we're going to look at is identify the quality control standard and practices within the accounting profession. So basically what we're looking now is how does the audit firm regulate itself, basically? What are some good practices, some quality control standard? And basically this is the end of this session. Make sure to read your textbook, complete your homework, stay motivated, and you will do fine.